let's start with a quick look at the markets. They're a little bit soft today after a record November. And I just want to start with you, Roger. What's ahead of us for this last month, December in 2020, one of the worst years in many cases, but one of the best years ever in the stock market?
Well, James, I'll be honest with you. I'm still seeing a very perplexed situation right now. It's literally like we've been driving for 200 miles and we're finally at a crossroad, and we have these two streets, and one is that COVID, we're getting that reinfection, stayed home, and the other one, we're kind of in the clear. There's a beautiful, beach, and it's just like out of a movie. You got two roads to go to and you don't know which to go. And I'm going to tell you right now, the market is thoroughly confused right now. Thoroughly confused. If you look, first of all, we had a lot of news last week to absorb, but at the same time, we had a fragmented week. We had the biggest travel week of the year, which means there's a lot of hedge fund guys who were completely out of the loop last week, who are just now coming back, and who'll probably be back to work by Wednesday of this week, or Tuesday of this week. So I don't usually make much of holiday weeks because they tend to be fragmented alongside with the market. But right now, I'm very cautious because of the put to call ratio. The put to call ratio is showing a huge exuberance on the upside. And I'm also uncomfortable with the dynamic between the NASDAQ 100 and the rest of the indexes. If you look at the market, for example, this morning, all the indices were down, but the NASDAQ 100 was up. To me, that's fear. Instead of the market looking forward to COVID vaccine, it's looking back into the stay-at-home environment. And again, it's every day right now is touch and go, because you have this, and this is exactly what I explained last week. On one hand, you have this huge spike in COVIDs, no thanks to the Thanksgiving holiday. And you have this huge ramp up in the number of people getting sick. And on the other hand, you have these companies, 3 companies saying, hey, it's all going to be great, 95% efficient. It's coming your way. Don't worry, we got you covered. And again, it's kind of like the market doesn't know what to do with itself. It's fragmented, it's distorted, it's overbought, and it's confused. And that's what I'm seeing right now.
Sure. Okay. And Adam, what do you see?
Sure. So it's record gains on Wall Street almost for the year. The major indices are all trading at or near record highs. Like you said, James, at the beginning, this is the one of the strongest months, I think, in the Dow for over 30 years.
Right.
So what I'm seeing here is just normal profit taking after a huge move up. I think it's healthy. Consolidation or pullback is needed. We are seeing, like Roger just said, a big dichotomy in the market between the stay-at-home stuff and the get back to work stuff, or back to normal, and the vaccine, not a vaccine, so on and so forth. I think the market and the entire world would like some clarity with respect to what's actually going to happen. And that's, once we get that clarity, it's going to help out a lot. The stocks that are involved with the vaccines, like Moderna, is up over 40% in 3 days, I think it is, or 4 days, or some crazy amount like that, if not more. And those kind of moves are just not sustainable, even if they have a record-changing, vaccine or whatever the case may be. The good news is every day we're getting closer to the end of this COVID nightmare and this COVID scenario, and that's a good thing, from just a sigh of relief. Sure. Now, once we get that sigh of relief, like Roger said, it's a busy travel week last week, and everywhere I've gone, malls are packed. Look at the retail data that we saw. Black Friday numbers are up, and up big. We're looking at just traffic across everything is up and up big, even with the big jump in cases. So from my standpoint, I'm still bullish, intermediate and longer term. Short term, the things that Roger just mentioned are all relevant. I do expect a little bit of a pullback or consolidation here as we take some profits, but I am very bullish over the next, the next several weeks as we head into the end of the year here.
Sure. And Jeff Yasteen, bull or bear?
I would say bull, but with a small degree of caution. We'll hedge it down the middle. And like Roger was saying, I think the market is at something of a crossroads, but I'll invoke Yogi Berra's name here, and a quote that he may or may not have said about, when you come to a fork in the road, take it. So we'll take both halves of it here. And I would say, one, look, we're in this very, bullish environment, and seasonally, this is a bullish period. So, I would respect that trend. The other aspect of it is to me, is the Russell 2000. That's kind of like your canary in the coal mine. It was the last of the indexes to make a new all-time high. And I think the longer it can stay above that breakout point, I'm sorry, I don't remember what the exact number was, but look at August 2018 was the last high. And I think 2 weeks ago is when the Russell broke out above that. So to me, as long as the Russell 2000, the small caps, can stay above that breakout point, the more likely it is that we can continue this, melt up, or whatever you want to call it. It may or may not make sense to many people, but you have to respect it. But at the same time, again, as Roger's saying, put call ratios and things like that, because I was talking about those with in recent days myself. And could there be a pullback like we're possibly seeing today? Absolutely. So respect that, but also respect the time of the year and this breakout that we've begun to see in small caps and value stocks.
Yeah, you bet. We've seen a real over the last week, during the Thanksgiving week, I was watching the price of gold and Bitcoins. Both of those alternative monetary asset classes really got smoked in the last part of, actually on Friday, sort of started Wednesday, bled into Friday. And I just thought, that's really interesting. What does that mean, Roger?
Well, I think that investors are fully focused on the stock market. You see here, and here's the problem. We're in a position right now where one of the two sides is going to show us some profit over the next few months, because I think one of those two trends that I've discussed is going to really prove itself. And what I'm hoping will happen is the vaccines will win out. But what I'm fearful is going to happen is we're going to see exactly what we saw last March and April, except this time we may see it in December and January. And I'm hoping that's not going to happen. I'm hoping I got my fingers and toes crossed. But the problem is right now, California just got closed down Friday or Saturday. This trend looks like it's going to continue. Again, realistically speaking, I think that the sell-off that you've seen in gold and Bitcoin is a reality that certain stocks are going to rally. We just don't know which way the rally is going to go. If you recall, back when we had the spike in March, we saw gold rise, but prior to that, we saw a big sell-off. And right now, gold is trading right around the 200-day moving average, and the RSI oscillator is extremely oversold. So what I'm seeing a potential shakeout in the gold market ahead of some upside developing, especially if one of those two scenarios, especially the stay-at-home scenario, develops. By the way, this morning, pre-open, the only indice that was trading higher was the NASDAQ 100. The Russell, the S&P, and the Dow were all down. And again, that's indicative of that stay-at-home environment. And also, James, another thing is you don't want to make too many strong decisions on any asset going into the holiday weekend as big as Thanksgiving, because there's very little liquidity. So you may see a big dump in gold, but it's hard to figure out if that dump is a legitimate dump, or if it's triggered because of lack of liquidity, because 80% of gold hedge funds are on holiday. So again, I always take trading around the holidays with a big grain of salt, because you don't have. And this goes back to the days when I was a broker. I remember early 2000s when I was a broker, and I would come into the shop Friday morning, and I mean, literally, it was like dead. There would be a call. This is back early 2000s. This is before the internet was mainstream. Large funds would call, and I would literally, instead of getting 10 calls every hour, I would get one call. It was just like sitting and watching paint dry. So I wouldn't make too much of the trading action getting into the holidays and getting out of the holidays. It tends to be very, very randomized. And it just doesn't have a lot of staying power, and it doesn't have a lot of directional bias. So I wouldn't be surprised to see an opposite reaction in gold, especially because we're near the 200-day moving average.
Okay, Adam, what do you make of the gold and Bitcoin depreciation over the last couple of days?
Yeah, it's important to note that even Bitcoin's big drop, I think it fell 2,000 or 3,000 points last week on Friday or Thursday. You had to, if you look at it today, almost all of that decline has been made up in one day. I mean, it's up over, I think, 3,000 points today, or 18%, or some wacky number where it moves up a lot. I mean, imagine you have a stock like Apple that goes up 18% or down 18% in a day. That's a lot. So Bitcoin's back up today, erasing most of the gains. It's almost trading at new all-time highs. The fact that it couldn't fall from extended and very overbought conditions, to me, is very bullish. It tells me that there's still a lot of buying below the market. The first chance buyers had to show up and buy that dip, they did, and they did in a very big way. And when that happens, that usually tells me it's not, Aunt Jane and Uncle Joe doing the buying. It's the big institutional guys that are stepping up and doing the buying. So for me, Bitcoins is still in an uptrend, intermediate and long term, even short term. It is overbought. It is due to pull back. The inability to fall from those conditions, to me, is very bullish. Now, with respect to gold, I'm also agree with Roger. It has corrected a lot. Now, granted, it had a huge move over the summer, well, Q2 and Q3, and now it's just pulling back to digest that move. It is trading near the 200-day moving average. Full disclosure, I am long gold down here at these levels. I got long last week, and same with Bitcoin. So I've been long Bitcoin for a while, but gold is due to pull back. It had a pullback. It's due to bounce. I mean, it doesn't go straight up or straight down. Technically, this would be a perfect place for gold to bounce. Intermediate and long term, just like Bitcoin today is overbought, that's how gold was a few months ago. So gold pulled back. It digested that move. Ideally, we'd like to see it find support and then rally and then hit new highs. That's what the bulls want to see happen. I'm of the mindset that Bitcoin may do the same thing, where you had a huge move up, it has to pause to digest that move. And then after that decline, which is what's happening now in gold, Bitcoin's going to blast off again and go even higher if it does follow the script that gold just followed. If it doesn't, and it continues just shooting straight up, it'll hit all-time highs before you can blink your eyes, because Bitcoin tends to be one of those asset classes that most people just either it's a blind spot or don't agree on or don't like. And those kind of assets that go up irrespective of the crowd, and most people are not invested heavily in Bitcoin, that leaves a lot more room for more buyers to show up. On top of that, you had a lot of institutional investors like Stanley Druckenmiller and Paul Tudor Jones turned bullish on Bitcoin earlier this year. And those guys are the smartest guys in the room. And if they're bullish on Bitcoin, then who am I to argue with them? So from my standpoint, I'm still bullish on both those assets. And to me, that tells you it's a bullish thing for stocks as well.
I just wanted to add to something that Adam just said a minute ago, specifically the last part. I think this is a trend that we're going to be seeing. A lot of the large hedge fund guys buying Bitcoin because they are increasingly frustrated with the stock market, and they do believe the stock market is overvalued. A lot of these guys do look at fundamentals, and this is not a theory of mine. They've been very vocal over the last 2 years. Both of the guys that Adam mentioned, by the way, they've been very vocal about the stock market maybe getting a little ahead of itself. So I'm actually seeing a lot more of the traditional hedge fund guys starting to get into Bitcoin now, a lot more into non-traditional Bitcoin and those type of assets as an alternative and or as a hedge against the stock market. So I'm also seeing a lot of that for those reasons that Adam mentioned. I think that's a very good point you just made in the towards the end there.
Thank you. And also, James, one more point too. If you look at gold, most people look at it as a commodity, right? Because that's traditionally what it is. But the last few years, it's become more of a currency because it's a good hedge against inflation and so on and so forth. And Bitcoin, other crypto, they're currencies as well. So when I look at the macro environment, the global macro environment, I look at, okay, there's stocks, there's bonds, there's currencies, and there's commodities. Those are the big areas. And then you can look within each area, you'll see lots of different subsectors. But with respect to gold specifically, yes, it's technically a commodity, but it's also trading, lots of people argue, like a currency. So Bitcoin's up big. We know the troubles with the dollar. We know what's happening with euro. So the fact that gold is also in a longer term uptrend, to me, is very bullish. So that's just another point that I wanted to throw out there.
Sure. All right, Jeff Yasteen, how do you see the move in Bitcoin and gold?
Yeah, and I'll keep my answer short and just echo that what Roger and Adam were just saying. I'm really encouraged by what we see with gold, especially only because, as Adam noted, it hit its high back 2 months ago, 3 months ago, something like that, and is pulled back to the 200-day moving average, and I think as of this morning was below it a little bit. And I think it's kind of just your classic sort of pullback. I mean, the overall macro scenario hasn't changed at all as far as quantitative easing and Fed support and stimulus and all the rest. None of that has changed. So I look at the pullback in gold as a really good thing, and I'm looking to where I would see the best opportunities are in like the junior golds and that sort of thing, as a great sort of way to leverage the forthcoming strength that I expect to see in gold in coming weeks and months. And the same thing for Bitcoin. Of course, the charts don't look the same as what gold is, but you respect that huge uptrend that Bitcoin has carved out for itself in the last couple of months. And it may go sideways for a little while before it moves higher, but I could not agree more with what Adam and Roger are saying here.
And to Jeff's point right now about the junior miners, I'm glad you mentioned that. I was looking at gold. I was actually doing some deep analysis on gold last Friday and Thursday, right before the holiday, in comparison to the stock market. And I agree with both of you guys. I wouldn't be writing gold off and Bitcoin off, not even close, especially in this economy. But what's interesting is, if you look at a lot of the junior miners and some of the gold stocks, they're continuing to make all-time highs. They're usually a lot more correlated with gold than they are right now. And that's something very interesting too that Jeff brought up, that some of the stocks are still completely bullish and are near all-time highs. So, and we haven't had an environment like that with the miners and the gold, the actual asset, looking differently in quite some time. So again, I think that we're all on the same page, that I think we should all keep an eye on gold and not rule it out at all.
Yeah, and James, I'll add one other thing as well to what Roger and Adam were saying here. The thing, none of us ever talk about much anymore because it hasn't really existed for like 30 years now in terms of inflation. And it feels weird and odd to even be talking about inflation because, there really is none right now. At the same time, you have to sort of think like, well, what's supporting gold and Bitcoin moving higher here? And, could it be that the smart money, so to speak, is sniffing out, a dose of inflation somewhere down the line? Think of stuff like milk. There's so many dairy farmers who've cut back on their production, during the COVID crisis and all that. I'm sure they've been culling their herds. And then as we move out of this, whether that's 6 months or a year from now, as we move out of it, milk consumption goes back to a higher gear, but it takes time for everything else the supply side to come back in. So you can imagine with that. And, we were talking about oil last week. Oil's at 45.5 now. I think a week ago when we were talking about it was at 42 or 41. So, you can kind of see these things that may be all coming together to form some element that we haven't seen for a long time in terms of inflation in the US or global economy, perhaps.
Right. Okay. So then to what extent would you see the decrease in the price of Bitcoin and the price of gold as an endorsement of Joe Biden's incoming presidency relative to the effect he's going to have on the strength of the US dollar during his presidency? Roger?
You know what? If that has been reflected, I think that has only begun to be reflected. First of all, most of these moves have begun long before the election. They even began before the first debate that really changed the Russell. The only major impact, in my opinion, that Biden has had on the market has been specifically on the small caps and a few underlying sectors. I don't think the impact of Biden has been reflected on the global economy just yet. A, it's too early. B, we haven't seen any of his policies yet, and Trump is doing an amazing job of confusing the hell out of the world right now. God bless him. He's a marketer through and through. He is. He's doing an amazing job of keeping his base from keeping that hope that he will still become the president. And he's fighting it tooth and nail. He's fighting it tooth and nail. The majority, about 70% of his strong base still believes he's going to be the president. I see it. I see it on feedback emails I get every day. So I'm not going to give Joe Biden too much credit for where things are at this point yet. The only thing that I've seen Biden have a major change in has been the small caps versus the large caps and the dynamics of a few sectors. I don't think he has had the impact yet on Bitcoin, gold, and the global economy. I think all of those trends have started before Biden became the president, if you want to call him that at this point. I don't even know if I want to call him that at this point. I mean, really, it's just things are still a little out of whack. Yes, I do think he won. I'm not buying all of this conspiracy stuff. But again, one thing I learned about Trump over the last 4 years, you'd never, ever want to write him off. He has a way of bouncing. He does. He just has this way of coming back. So I just don't want to rule it out till it's official. And I'm just going to play it. And I think the market is that's partly some of the reason why the market is still a little bit confused. So that's my opinion. I know I didn't give you the kind of answer you were looking for, or a more specific answer. But again, James, I'm here to tell the truth. And I don't think the market is there quite yet. Okay.
Adam, to what extent would you see the price decrease or the price hits in those alternative monetary metals as some sort of vote of confidence in Biden's incoming effect on U.S. dollar strength?
Yeah, I would definitely agree with Roger on this one. The trends in gold have been around before Biden even entered the stage as a real front runner, let alone, quote unquote, the election and blah, blah, blah. So, gold's been going up for a long time. Bitcoin's been going up for a long time. And actually, Bitcoin, I believe, is one of the strongest, if not the strongest asset classes this year. So with respect to what's going to happen if and when January 20th rolls around to the inauguration and you have President-elect comes in or Trump stays, whatever the case may happen, the answer is nobody knows right now. There's an assumption that Biden takes over and it's a smooth transition, so on and so forth. So the market's pricing that in. The dollar has really been struggling for a while, again, even before Biden's come into the picture, so to speak. And that trend, the downtrend there, has been happening for many, 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 many months, if not longer. So for me, I much rather respect the trends that are in place. And until, the trend can bend, but until the trend breaks, I've got to give those trends the benefit of the doubt. And as to Jeff's point and Roger's point, this gold, the junior miners, or the GDX is an ETF that tracks the miners. The GDXJ is an ETF that tracks the junior gold miners. So if you want to buy specific gold stocks, you can. If you want to buy the juniors, you can buy the GDXJ. You want to buy the GDX, that's all the miners put together. But there's lots of areas here for whether Biden wins, Trump stays in office, that all obviously matters. But with respect to what's happening now in these two asset classes, Bitcoin and gold, it takes a back seat because these trends are really in place and they've been in place for many, many months.
Jeff Yasteen, where do you see the relationship between the price hits in alternative monetary assets and Joe Biden, if any?
Yeah, I would just be repeating what Roger and Adam said here. The one thing I'll add that we haven't talked about yet is the impact of this Georgia Senate runoff thing that's coming up. Was it January 5th, I believe? That could be have a huge impact on the market, not necessarily in terms of big sell-off, one way or the other on that day or the day after as the results come in, but just in terms of depending on if the Democrats win and can get control of the Senate there, obviously that would free up the Biden administration to do a lot more aggressive policy, which presumably, would play right into the idea of gold and Bitcoin and a weaker dollar. So, look for that January 5th election as, I think, another sort of key waypoint, if you will, to following this trend. And I love what Adam was saying as far as trends that can bend, but they don't necessarily break. And I think that's a great way to express where we're at right now. If we were following, a GPS Waze map of the stock markets and metals and Bitcoin in particular.
All right. Great, gentlemen. That's an awesome roundtable as usual. We'll leave it there for now and have a fantastic trading week. We'll see you next week.